Hello. Let's to see the chart in the SP 500 index. This is 1 day time frame. And the globally, we see that the SP index really has the uptrend, but here in the March and the February situation, we see the really seriously deviation in the index and the full stocks in the United States. So the current situation, as for me, looks really bearish. And we see the clear level here uh, for the distribution, the channel, and this situation in the January of this year. And I think that the price tries to touch to the coming back to this distribution. But as for me, here we can expect the moving down. And also, I want to demonstrate you the next situation in the 1 hour time frame. The 1 hour time frame demonstrates us the really strong resistance here in this diapason of the level of $5,988 to the level of $6,153. It's all-time high. And so I expect that the price takes it to this level, and we see like the sellers demonstrates their power. So what I expect that the price must come back to closing this gap in this diapason. If price really push down, and we will see the movement like that, I think that the price will be ready to going down again to this level for the closing these gaps. I don't only think that a full technical analysis must be built in the in closing the gaps or price movement from the gap to gap. I think that the gold will be really outperformed, and I see here the close connections between the SP 500 and as you see, the seriously deviation according to the policy managing in the United States. And there are a lot of challenges for the investors, and I think that the gold will be really outperform the SP 500 in the midterm, but basis is the bear trap for SP. So if you see the 4 hour time frame, it will be more demonstrable because this level will be really sensitive for understanding will the price will be back to the resistance again, like we see it now, or no. If we see this scenario with the bearish scenario, and we won't see any bounces since this diapason, it means that we are really ready to going down and down in the SP 500. So SP really outperformed a lot of different indexes in the different countries, but the basis is the problems in the United States with the debt, and there is the seriously tensions here, and it's really issue. For solving that problem, the government must provoke the printing the dollars. If we don't see that, it means that the market will be really crushed. Because a lot of companies needs cash, and a lot of the different companies try to understand their future in this global area of the different interests, because we see like the globalization really transform to the glocalization. It means that it's really influenced in the United States economy and the regional economy at all, in the North America and the South America and other. So my outperforming and anticipating the SP 500, it's really bear trap. I can tell about it in the short term. What about the midterm? We only can see from this level. Also, there is the alternation about this vision. We can also seriously expect something positive from the policy of the United States and the government policy, and the price can be really pushed up to the level of $6,153. And if we see so, it means that the price is going to the new all-time high. But it's summer. I don't think that it will be in this summer. But all cycles are individuals. And according to the different investors, this cycle will be really serious trap and the challenge for surviving in their companies. And a lot of companies, I think, will try to go in cash. And because of that, they must sold out their shares. And I think so. So if the price come back to this diapason and will be a new accumulation for continuation of the pumping. So we must to see only these two scenarios. The two basic scenarios for understanding the future of the SP 500. If you like my comment, subscribe to my YouTube channel and also to my Telegram channel. I'm also the partner of the Funded Next in the prop firm, and you can trade in there and making your capital much better. So thank you for the attention.